Hello friends, and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Orient Abrasives. Is it a value buy at these levels or is it an avoid? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Orient Abrasive, here's more requests that can you support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers on greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. And also, if you cannot pay on Patreon, you can join me on YouTube and you can get the same benefits as Patreon members. Now about the company. Established in 1974, Orient Abrasives is the largest manufacturer of calcined and fused alumina products. Manufacture facilities are in 8 countries at the moment, and their key products are high alumina raw materials, monolithic and ceramic propellants. So basically they produce raw materials for ceramic usage and products. Usage in iron and steel industry is big time, but with iron and steel prices going up, raw material cost has surged for the company. It is a part of a Ashapura group established in 1960. If you look at the financials, so these are September quarter numbers. Sales were up by only about 8% year on year, although many companies in different segments and you can say industries have performed extremely well on a year basis, because FY21 has not been that great, but Orient Abrasive has come out with very muted sales growth, and profit dipped by 50% to around 1 crore versus 2 crore. So nearly it is getting into losses at the moment. High promoter and institutional holding, there's very good FII holding in here. And there's 22% free float, 22% is with the public shareholders. Operating profit margin is of 14%, net profit margin of 13%. And ROE is not that great at around 7%. So all these matrices, or you can say margins, return ratios, are decreasing year on year, and that is a cause for concern if you look at this company overall. So why the stock is down from its peak, and it's down something like 25-30%, even more from its 2 year high. If you look at from its 2017 high, it's down like 35-40%. Rising raw material cost is one thing. So for producing alumina, etc., steel products, the prices of the raw material has gone up. The prices of oil has gone up over the last 1 year. A global shutdown of businesses has also not helped, and things have not improved that much as compared to other businesses. You look at the automobile industry, it is struggling. You look at manufacturing industry, it is also struggling. Global manufacturing industry is struggling. Yes, it is up from the bottom, but still not quite at the same levels as say 2017-18. So the downturn began from 2018, early FY18, or late part of FY18, which is early calendar year 2018, and it has continued up till now. So 3 years of downturn in the industry has really plagued the numbers and the company's profitability, sales growth. Flat profit growth over 3 years is also a concern. So that's what I am saying, that from FY18 onward, things have not looked up for the company overall. It's a 300 crore market cap company, but the results have to be something like 30-40% profit growth for such companies to go up, because smaller companies should generate more profitability. Basically that should be the criteria when somebody is looking to buy into very small companies which are less than 1000 crore market cap, 2000 crore market cap. They should have a profitability of 40-50%. Debt is increasing, that is also a major concern with the company, and debtor days have increased. So difficult for the company to pay the debt very quickly as they were doing earlier, and things have to look up globally for this company to continue to perform and ROE to improve going forward. So what needs to be done? In my opinion, avoid for the time being. Don't just invest and hope for the best. You need not get into, you can say, hope stocks. wait for numbers to improve, wait for a consistent 25-30% profit growth to come in. That is a profit growth of 7-8% quarterly to come in. Let things move on ground. Let some you can say news flow come in or announcements come in that they are increasing capacity after demand has surged or demand has virtually surged with the numbers coming in, etc. If you have a 3 to 4 year view, I think numbers will come in. But if you have it, only then hold. If you don't have it, don't put in you can say new amount into the stock. So this was my video on Orient Abrasive. Please like and subscribe my channel. Hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.